Hi, Vijay Mistry here, and thank you for joining me in this first video of the three-part free video series on finance for directors and executives. This is exclusively for-profit organizations. If you're a non-profit organization, visit www.rentadirector.com, where there is a set of free videos for the non-profit organization. But for this particular training, this is all about developing your financial literacy, developing your financial competence and financial intelligence for you to make those effective decisions and evolve and raise your skills and raise your standards. So this is all about converting complex financials into simple executive information, and this is applicable to small, medium and large organizations. Now the first part of this video is about an acronym called NERV. The N stands for net profit. My dear friends, net profit is sales less cost equals to net profit. Now there are other elements to this. There's net profit before interest and tax, net profit before tax, and finally net profit after tax. So there are different elements, but for now I just want you to understand net profit. Net profit is for a particular period, and it is about the performance, about the activities and about the functions and the operations that took place for a certain period. It could be from 1st of January to 31st of January, or it could be from 1st of January to 31st of December, depending on what you are reading. But net profit is actually the dynamic activity that took place in your organization. And what you really need to understand in net profit is what has happened in the organization, what sort of activities and what has been happening, and whether the contributions have had that value for money. So that's what you really need to see, and whether there has been that return on investment. Let's move forward to the next point, which is expenses. Now, obviously you're going to incur expenses. These are operating expenses at present, which I'm talking about. So the expenses for that particular period is pretty important, and you need to find out exactly what is happening as regards expenses within your business or your organization or any financial report or management report that you are reading, because at the end of the day there is a lot of linear efficiencies that you need to detect. And here's a tip for you. If there were 3 specific expenses which we can cut without compromising on quality, what would those be? So this is just a simple sort of question, but it brings out a different level of mindset and thinking. So look into your expenses and figure out exactly how you can make it leaner. The third point is revenues. Now everything revolves around revenues or sales. So sales and revenues is everything that matters. It is the impact that you made and the velocity of your sales team and what they have done to generate sales. But here's the thing. In your sales, what amount is invoiced and what amount is cash? Because you and I know that cash is the oxygen of your organization. Cash forms the lifeblood of your organization. So what is that differentiating factor? That is something that you really need to find out, because you need to find out the behavior, the pattern, and what is happening to the trend and the activities and the growth of your organization. Another important point, from a quality and service standpoint, you need to find out, are you getting too many returns coming back? In other words, are there people who are asking for refunds? And you need to find out exactly why that is happening. Let's move forward to the next point, which is variance. Now, variance is the difference, or rather a comparison between what happened in this period as a comparison to the last period. So in other words, if you are looking at a cost of, say, salaries, I'm just giving you an example, management salaries. So in one period, management salaries was, say, $25,000, and now it is $30,000 or $50,000 or whatever it is. You need to find out exactly what happened. Have you got a new manager, or what is happening, and is that really adding and contributing to the pipeline of growth of your organization? So variance is important, finding out exactly where the material differences are. Let's move forward to the next point, which is employee. Look, we know that the employees in any organization is the most important asset in your organization. They are the most important asset in your organization. The employee return on investment is very, very crucial and very important. What you need to find out is, if you have training and development in place, if you have new employees, has that really added value? What has happened? What is happening as regards the employee, and what is that contribution to this whole profitability within your organization? So where are the struggles? That is key and crucial to the growth of your organization. Let's move forward to the second phase of this video. So in the second phase, 3 financial insights. The first is profit and loss. Profit and loss in its simplest term is sales and revenue less any variable costs. So any direct costs related to the sales and revenue of your organization, which will give you the gross margin or the gross profit. So you need to find out what is that velocity and what is the dynamism as regards the activity taking place from a variable standpoint. So that is very important. After that comes the expenses which are non-variable. These are the indirect expenses, as they put it. For example, you might have rent or salaries or rates or telephones or administration costs. Those costs which are not directly correlated to the sales, generating of sales. So that is what you need to understand, which is going to ultimately give you a profit, a break-even position, or a loss in your organization, depending on what has happened. Now, what does this really mean for you? What you really need to find out is how well is your organization generating the revenues? What is happening as regards the financials from a profit and loss standpoint? What is happening to the operating activities? Is it improving or is it going down? Are you really getting the right market share in your sector and in your industry? So that is very important. Let's move forward to the next one, which is balance sheet. Now, when we are talking about a balance sheet is a snapshot. It's basically like a historical snapshot. For example, if you are, say, on the 15th of January and you're reading a balance sheet as at 31st of December, will change the face of the balance sheet. And the balance sheet is basically the assets and liabilities, what you owe and what is owned by you. It also has working capital and other areas as well, which are important. But right now, you just need to understand that balance sheet is basically a snapshot of the book value or the net worth of your organization, the net asset value of your organization. What you need to find out is it growing or what is happening? You need to find that out. Let's move to the third one, which is cash flow. Now, this is very important and people need to understand this. Profits and cash are two different things. If you do recall, when we were going through the acronym of NERV and I spoke to you about returns and I spoke to you about invoiced amount, what happens here is you might have invoiced people and there's something called the accrual concept. I won't go much into details, but what happens is that income is recognized. Income or an expenditure is recognized at the point of giving that service. For example, if you have invoiced somebody and you've accorded facilities of 30, 60, 90 days, it means that you are going to be paid later on, but the income has been factored in. That is why there's a variation between profit and cash. That is the variation. It's about receipts and payments. It gives you what has come out and what has gone. So that is what it is. It gives you a cash flow itself. Very important, very instrumental document. So these are the 3 financial insights I wanted to share with you for now. And here's something that I wanted to share with you. Changes in your financial condition is due to changes internally and externally. Whatever is happening out there and whatever is happening internally is going to have a direct impact to what you do. So that is very crucial. Let's move forward to the next part, which is story. Now this is where it becomes very interesting. Profits up or down Why? You need to figure out what are the pain points in your organization, what is hurting the organization, and why. What is the reason? You need to identify and weed out these problems. Look, my dear friends, we are in the year 2017 and business models have radically changed. So you need to be very switched on about what is going on in your organization. If you see draggers within your profit and loss, you need to find out why it is happening. So the question is, if the profits have gone up, what was the reason why the profits went up? And if they say that, oh, our customer base increased, then what happened that made that increase? You have to try and codify and drill down further in order to find out what is that 80-20 principle. What is that 20% which is producing the 80% results? That is the whole thing here. That is what you need to really ascertain and establish. So by asking why, you're trying to get into the root cause as to what is happening. So that's very important. Let's move forward to the next one, which is costs, up or down, why? Again, same question. What has happened? So if the salaries went up, why did they go up? We hired a new manager. Why did we hire a new manager? We hired a new manager for this particular operation. Then you can ask, what has happened? What's the story behind it? So for example, somebody has joined 3 months ago, the cost has gone up due to the salaries and other expenses, but what has he or she contributed to the whole value pipeline of your organization? What I'm trying to do here is asking you to go further, deeper, to find out exactly what's going on. And the final one is on sales, up or down, and why. There is disruption going on at this particular point in time. Many organizations feel the pinch or feel the pain of new entrants coming into the market. So you have to be extremely careful and extremely switched on as to what is really happening. And sales is pivotal and integral to ensuring that your organization keeps on progressing. You have to position your company in such a way to ensure that the profitability is being driven by the growth in sales at all times. So what is the velocity? What is the dynamism? What is the capability? On a scale of 1 to 10, how capable are you in driving the sales that you and your team are at present operating under? So you need to find out exactly why have the sales gone up or down. Is there new ideas or new innovation or new activities which is disrupting what you are doing? This is very important. Or has somebody taken over the niche market which you used to supply? You need to find out and segment and ascertain as to what is happening. And what will this do? This will enable you to tweak the roadmap which you have. So if you have a strategy, and obviously all strategies include financials, and financial strategy is part of the whole process, you need to tweak accordingly to ensure that you have the right trajectory in place. You're more aligned and attuned to what the customer, client, and market behavior is. I hope you got an insight as to why story is so important for your organization. So, my dear friends, in the next video, I'm going to share with you 3 tools which every directors, managers, and executives must have. That is going to be another insightful video, I believe. And I hope you enjoyed this first video as much as I've enjoyed making it. And I look forward to seeing you in the next video. Thank you very much.